Joining us to unravel that allure of gold as an asset class is the man at the helm of the World Gold Council, David Tait, CEO, in conversation with Manisha Gupta, and they will be, in fact, exploring the glittering world of gold investments for a session that's titled The Golden Touch, When the Portfolio Glitters. So please join me in welcoming David Tait.
David, thank you so much for joining us today. And no conversation really is complete until you have spoken about gold. But just because we are coming back from a very strong sports conversation, I do understand that you've climbed Everest 5 times. Why did you do that?
Yes, I needed to find something to do. I raised money for a charity, and I started climbing Everest back in 2005. When I'd pretty much done everything else I could think of to raise money for the charity, and I raised so much on the first climb, I simply kept going back.
Well, gold it is then, and it has been an outperformer, has gained 80 to 120% in last year, depending on what market and what currency that we are looking at. And David, it's not just another year, because we are talking about politics and geopolitics and central bank buying and tariffs and currency alignment. There's just so much to gold right now with the way gold has been moving. And then we have JP Morgan's and UBS telling us that $6,000, $6,200 an ounce is what we could be looking at in this year. Would you say that the bullishness could continue? And what are the fundamentals that you're looking at?
I know you'd expect me to say gold is going up, given my position, but I generally answer this question. I'm always very tempted to come out with a number, but my team frown at me for doing that. But that being said, I could best couch it by saying I think there are 6 or 7 main reasons why gold will continue higher, and I'll quickly list them for you. The first is the geopolitic that we all read about so much, and that's somewhat obvious to most of you in the room. The normal ladybird book of economics, interest rates and the dollar, they're all supportive of it. You've got central bank buying, which is consistently over the last 3 years bought around about 1,000 tons. Last year is slightly lower, but I see that continuing. And then you've got some more interesting things. You've got deregulation in China. Some of you may have realized that the insurance industry has been opened to gold for the very first time. That's a $5 trillion market. You've also got, in India, you've got the growth of the ETF world, which is, I think, proving a very attractive way for younger people to buy gold. 25 ETFs, I think, opened last year alone in India. And then in Japan, you've got a whole generation of older people passing on their wealth to younger people who are confronted with inflation, depreciating currency, geopolitical problems, nationalism, all things that were alien over the last 30 years, and also now with a predisposition to gold. But I do think the one fundamental that is running through this whole gold rally is a fear of debt runaway. I think you'll remember last April when Mr. Trump imposed tariffs everywhere. You remember that the US yield curve, the interest rates in the States, jumped en masse higher. And it was a lack of trust moment in the US. It wasn't a reflection of inflation. It was a jump higher. In that moment, I think Mr. Besant realized that they were on the cusp of not being able to finance any debt going forward. And that would have been a financial Armageddon. And that's when he intervened. So I think debt is still running through this fear. Mr. Warsh's appointment recently was a case in point. It produced a severe correction in gold, which makes me think that is the underlying driver. And as a consequence, I think we do not have a prospect of decreasing any of the national debts at the moment, frankly, quite the opposite. And that's why I think gold will continue higher. There is one possible scenario where I would be nervous of holding gold, and that is if Mr. Trump manages to generate a very high GDP number in the United States, something like 6 to 7% next year, which is very unlikely. If he does that with moderate inflation, he might be able to project that the national debt, the public debt, and the international debt could be on a descending path. Now, probability adjusted, that's very low. But if he does do it, the crowd that continually moan about currency debasement from that debt won't have quite the platform they have had to date. Now, it's a very low chance, but I would just put that on everybody's radar. But let me be clear, 7 very good reasons why it's continue higher, and 1 remote reason why it might come down.
Gold has outperformed various other asset classes in the last 12 months, and even with that, the demand in 2025 for gold was at a record highs. Are you anticipating similar kind of numbers now for this year?
Yes, last year's gold demand globally was a record. I mean, talking about India in particular, your demand was 711 tons as a nation, which was, I think, down around about 11%. You saw jewelry demand down to 440 tons, which was a decline of 24%. But that's not unexpected considering the price rise rally and the speed of it. But most notably, we saw an increase in your investment bar and coin demand, which I think reflects what I just previously said about the deep gut feeling we have of a financial meltdown and debt. That was up 17% year on year. And I think the amount of inflows you had into your country last year, your imports themselves were slightly down at 860 tons, but again, not catastrophic. So overall, I think the demand for gold globally will continue. I think India's market is particularly well supported. It's part of your culture. But I do think the most notable part of the future of Indian gold demand will be your institutions, and as your pension funds and insurance funds manage to, I suppose, embed it within portfolios. That is still relatively nascent. We all know jewelry is not nascent in India. It's certainly well established. But perhaps your younger generation, alongside their jewelry, will want to hold gold in various other forms, for instance, like gold-backed ETFs, as an example.
Since you started talking about India, we are the world's second largest consumers of gold. We continue to import 700 to 800 tons per annum, as you said. With the kind of valuations that gold is holding right now, and as you said, $5 trillion worth of gold is what India holds perhaps. We're looking at 30 to 35,000 tons with people here. At these current levels, even as Indians might feel wealthy because the gold has seen such huge appreciation, but do you also see a bit of a slowdown when it comes to buying, especially in jewelry?
I think it's been a natural, well, I think probably the best way to approach this is to look at the central bank buying and think of that as country buying. Central banks buy gold essentially for the very same reasons anyone in this room would do it. In fact, if you imagine the central banks who operate, let's say, east of Dubai, shall we say, for argument's sake, they are buying gold because they are behind the gold buying curve compared to Western central banks. Why are they trying to catch up? Well, it's interesting. Some of the conversations are, well, because they are pointing towards the West. They've got gold, so we need gold. Other conversations are more informed. They're saying we run our reserves as if they are a portfolio, just like anybody else, and we can see that holding gold as part of that portfolio makes sense. Others buy it because they are used to wild swings in inflation, they're used to having runs on their currency, and they need something to bolster their security, financial security going forward. And then there's a bunch of them, as you well know, who are defensive, who want to try and divest themselves of links to the West and trying to secure themselves financially such that their reserves and other financial assets are not sequestered, as you've seen sometimes around the world. So the bottom line is we expect the vast majority of developing central banks to continue to buy. We haven't seen much selling at all, and I have been sort of surprised, I do admit, that given the revaluation of some of those reserves, as in the price going from 3,000 to 5,000 as an example, hasn't produced rebalancing amongst them, which most portfolio managers would do if the value of one of their holdings changes. Central banks don't seem to be thinking of it in those terms. They think of it as a static item, much like the Fed do. The Fed have never revalued their gold. And so the only conclusion I can draw then is, given all the events I've described, all the threats to society and economies around the world, I expect central banks to keep on accumulating.
David, another trend that we also have seen is that there are more and more people buying gold as an investment now. People don't want to pay making charges, don't want to waste that money on that. Do you see investment now competing with jewelry buying very, very strongly?
Yes, across the world, it's become, I suppose, our biggest focus, to be perfectly honest. Across the world, we are trying to encourage most asset managers to develop their investments in gold. In fact, I was brought into the World Gold Council my role was to try and open the gold as an investment asset. It's worth noting that in my previous career at Goldman Sachs, I traded every other asset class in the world except gold. And one of the reasons was because it was a complicated, clunky, risk-full, difficult asset class to trade relative to others. And so we have spent a lot of work at the World Gold Council over the last 6 or 7 years trying to make gold less capital intensive, easier to hold, more divisible, more trusted, more transparent as a means of lowering those capital barriers to entry. So what I anticipate over the forthcoming years, as a consequence of this work and further work, is you will see the institutional world begin to accept gold in portfolios far more readily than they've ever done in the past. As an example, I briefly described the flows that I expect to come into gold ETFs in Japan as an example. That's a $5 trillion market, and not one piece of gold has been bought. I'm exaggerating. Tiny amounts so far. If you look at China, the same is true. Their insurance industry has just opened its market. That alone is another $5 trillion market that has not yet invested in gold. And your own Indian pensions and insurance companies are of similar magnitude. So institutional gold buying, I think, is the future. And that's why we're trying to make it as easy as possible to do so.
That's quite a change, as you said, looking at your career there, David. But how would you look at the India opportunity with the kind of household holdings that we have, the strong ETF buying that we've seen for the month of January at record highs? Do you see a very modern way of buying gold, especially in the Indian markets also now?
A modern way of gold? Yes. I honestly believe that your younger generation needs something. I don't think, that's not to diminish the role of jewelry. I just think the younger generation have mobile phone access, they have access to all forms of investment around the world, and trying to provide them with access to physical gold that is more aligned with their culture, more aligned with their lifestyle, I think is at the forefront of what we're trying to do. Across the world, people are focusing on gold tokens, gold stablecoins, and similar instruments like that. But I think in India in particular, given your rules, given your regulations, I think the gold-backed ETF is the way for your younger generation to focus. We are putting a lot of work into analysing why stablecoins, gold ones in particular, have largely failed throughout the world, and we're building infrastructure in the background to provide the facilities for people to be able to back into a gold ecosystem such that they can benefit from these products. But that's a work in progress.
David, just going back to your experience from Goldman Sachs, to where we stand right now in sense of gold prices, gold rate of return, and of course gold investments, and the fact that we've seen Basel III reforms now recognizing gold as a high-quality liquid asset, how does that change things for gold as a mainstream asset class?
Yeah, one of the I would say, main difficulties that gold has from a regulatory perspective is that it is not regarded as a high-quality liquid asset. That is a somewhat technical term. It sounds like a throwaway term. But essentially, the European Banking Authority back in 2013, after the 2008 crisis, was trying to judge the liquidity and the depth of these markets to see whether they could be considered a high-quality liquid asset on your balance sheet, on a bank's balance sheet. And quite simply put, when the European Banking Authority showed up at the London market to look at the, shall we say, the records, or trade records, and see how it had responded over previous stress periods, no one had kept any records. Quite literally, not one piece of trade reporting back in 2013. So even though the authorities wanted to align gold and make gold a high-quality liquid asset, they couldn't. And so gold has been suffering under what is an 85% penalty, I won't go into too much detail, for all these years. We're working very strongly in the background to try and open these regulations, these laws, such that the European banking authorities, the Bank for International Settlements, accepts gold as this asset. If it does, gold will become so mainstream at an institutional level that all those capital burdens that many people, asset managers and fund managers around the world struggle with, will start to fall away. It really is the Holy Grail, and I'm trying to draw in as many advocates as I can to align with the work that we are putting in to get this done. But it's definitely not an easy thing to do.
Let's talk about gold's tokenization and digitization now, because that really is the next modern way of buying it. We already have seen a lot of digital platforms in India where you can buy gold. And then tokenization is another thing. It's coming on blockchain. It is being tokenized. Tether is one big example like that. How are you looking at these various newer ways? And do you see this is the next big thing in gold now?
Absolutely. Digitalization, the World Gold Council see digitalization as the future of gold. Let me differentiate between digitalization and tokenization. We have a program at the World Gold Council working with all the major banks, global major banks, but in London, I should say, called Wholesale Digital Gold. Some of you, many of you here may be aware that the London market is divided into two pillars. Allocated gold, which is ownership of a physical gold bar, but a gold bar out of the movies, a giant gold bar, roughly $2 million nowadays. Or unallocated gold, which is a right to own paper gold, and you have a claim on a bank. We have taken the best bits from the allocated market and the best bits from the allocated market, and we're just about to launch a third market, or digital allocated gold market alongside it. What this does is gives you legal ownership of fractionalized, allocated gold, which is custody remote, which means it doesn't matter who holds that asset, you have legal ownership of the digital gold in a fractionalized sense for the very first time in history. This will mean, most importantly, that the banks who have previously been holding gold on their balance sheets, which has been redundant gold, because you can't do much with it, will be able to use and pledge this gold as collateral for the very first time in history. Now, legally, you have always been able to pledge this gold. But in reality, at 5 o'clock in an afternoon in London, when you want to pledge it to another bank, you have to literally put those gold bars on a truck. Not very practical. Under this system, that where we fractionalize allocated gold, the banks will be able to pass this gold around the world instantly, and for the first time in history use it, which is going to be hugely significant. The spillover of this, and why it's relevant to members of this audience, is that that same concept can be used by central banks, we believe, in the future to use their reserves in a more effective manner. And lastly, it could end up being the legally owned allocated gold that could back gold tokens and other financial products in the future. And that's what I personally think could be the secret sauce to ignite the gold token arena that has not been there before.
David, another thing that I know you're very, very seriously working on in World Gold Council is about responsibility of it. How do I know that the gold that I'm wearing is responsibly sourced, responsibly mined, and responsibly sold as well? I do understand that you're working on a database on the same. How much work is being done? How many people are onboarding onto it? How far are we from exactly knowing where my gold comes from?
This is probably the most important thing for the gold market. quite simply. Back in 2022, and to remind you, I came from a different world, so I was bewildered that I couldn't find a database to check anything about the gold I was about to buy. Very simply put, we set up a database with us and the LBMA, London Bullion Markets Association, for there to be a place where you could go and check to make sure the gold you've bought, you know its provenance, you can trust it. In 2022, we set this up. It now has all my large-scale gold mining members. All the large-scale gold mining members are putting their new gold into the database. All the LBMA refiners across the globe are now in this database. All the major banks are putting their gold into this database. My hope is, at some point in the future, is that every one of you will have an app on your phone whereby when you buy gold, hypothetically even jewelry at some point, you will be able to check where this gold has come from. My hope is that at some point, if you hold your gold outside this database, your market will slowly shrink. Because if I make the knowledge of this database ubiquitous as a safety net for everybody in this room, you won't take gold from gold that's not in the database. That's my major goal. The next thing, and that's for, I would say, the retailer, but probably more importantly is the work we're doing for small-scale and artisanal gold mining. For those of you who don't know, a lot of the gold that comes into India comes from Dubai. A lot of the gold that goes into Dubai comes from small and large-scale gold miners, and as a consequence have question marks attached to it. We are trying to set up a policy whereby we are working with G7 and G20 governments to try and redirect those flows away from bad actors by imposing a policy called the Gold Processing Initiative. This Gold Processing Initiative hopes to stop the use of children in mines. It hopes to stop the use of mercury in mines and be able to redirect that gold into the hands of good actors and into good refineries, and hopefully only good gold will come into India. And so I appeal to you, please make sure you know where your gold comes from. That's in the interests of the children and the women who are being trafficked. We've got to stop this.
Oh, well, absolutely. That is the word coming in from David Tait of the World Gold Council, telling you that, yes, continue to stay invested in gold, but buy responsibly sourced gold and know where your gold is coming in from. David Tait, thank you so much for this conversation. Really appreciate your time. Give it for David Tait, guys. Thank you.